Sunday evening, the Lakshmi Vilas Bank has said that the bank will continue to be run normally by a committee of directors, and this statement is more so to allay fears of shareholders and potential investors. Now, what is the reason behind this statement? Well, it leads back to the AGM which was held by Lakshmi Vilas Bank on 25th of September. What exactly happened at the AGM? Shareholders did not vote in favor of reappointment of 7 directors at the AGM, and this also included rejecting the reappointment of the newly appointed CEO S Sundar. In fact, shareholders did not approve of the reappointment of the statutory auditors as well. The only 3 directors who got the approval for shareholders were Meeta Makhan, Shakti, Sinha and Satish Kalra. So Lakshmi Vilas Bank has now come ahead and said that RBI has approved that the bank will be run by this committee of directors, which will be comprised of these 3 directors. They will be exercising the discretionary powers of the MD and CEO. In the meanwhile, till there is another MD and CEO appointed, and the day-to-day activities of the bank will not be affected. In fact, Lakshmi Vilas Bank has spoken about how the liquidity position as on date is comfortable for the bank. The liquidity coverage ratio at this point is in excess of 250%. It's at 262%. And the minimum requirement, they have said by RBI, is at around 100%. So the bank's liquidity coverage ratio is in a comfortable position. The bank also continues to enforce cost reduction measures, both of direct and indirect costs, is what the bank is saying. The PCR, the provision coverage ratio, also remains healthy at 72.6%. The minimum requirement given by the RBI under the prompt corrective action is 70%. So the PCR is also healthy for the bank, is what the statement says. Besides existing businesses, the bank will continue to focus on capital light loans. So that is one more point that the bank is clarifying on. All existing employees of the bank will continue to be in full service. They will be servicing the customers and the requests at the branches. And also, the shareholders have approved an increase of authorized share capital of up to 1,000 crore rupees. Now, the bank had said that the capital adequacy ratio of the bank, as per the Basel III guidelines, was just at 0.17% on 30th June 2020. So this fund infusion was extremely important. The shareholders have approved the fund infusion of up to 1,000 crore rupees. This will be, of course, subject to RBI's approval as well. But as of now, the shareholders' approval has come in. And they have also clarified that the process of the amalgamation with Clix Group will continue. So there will be no hindrance in that process. They have said that due diligence has been completed for the amalgamation with Clix Group. So that one process is going on for Lakshmi Vilas Bank. Remember, last year, Lakshmi Vilas Bank also tried to have an amalgamation merger with Indiabulls Housing Finance. That was rejected by the RBI. But this year, again, they are going to do the amalgamation with Clix Group, and that is on track. So this is what Lakshmi Vilas Bank is saying. They're trying to allay fears. They're saying that the board will function, the bank will continue to function under these 3 directors which have been approved by the shareholders.